All right, hello guys. This is the 7th, or rather the 8th of August 2024. Okay, now just imagine taking a trade that gives you a 1:8 risk reward ratio. Okay, depending on your lot size, this is around 200,000 or 300,000 or even 100,000. Looking at you right in the eye, if only you know the skill. If only, I say again, you know the skill. If you want to know the skill, walk with me and let me show you how. Okay guys, welcome. This is where we actually took that trade. At this axis, that's where we actually took the trade. Okay, so we saw price make an impulsive move and its inability to trade further up, and then it retraced back into the discount, okay, giving us an opportunity here, okay, in this fair value gap here, giving us an opportunity here. And then we draw a rectangle too, okay, like you all know, we draw a rectangle too. Now this, remember, this is a weekly chart, okay, this is a weekly chart, so let's denote that this is a weekly chart, so let's denote that week. Okay, now we move down to our daily chart. Okay, you can see it here, our daily chart. Okay, then remember that step one, once we see price playing out here, we are looking for 1, break of structure, 2, change of character, 3, return into an institutional reference point, maybe a fair value gap, an order block or a breakout block, and then before we enter a trade. Okay, so here there was a break of structure, here, okay, but price did not change character here. Here too there was a break of structure, okay, there's a break of structure here, and at this axis price changed character, but we can still go down to a lower time frame. Okay, 4 hours, this is a 4-hour time frame. Okay, are we together? Okay, this is a 4-hour time frame. Now let's go and pick our tool again. Remember, this is our institutional reference point, the 4 hours, right? Then there was this break of structure here around this region, but price did not trade above this, okay, showing us there is a change of character, and it traded downwards, okay, from here. And then there's another break of structure here. Okay, so at this point price was unable to go below this axis, so this is what we call low resistance liquidity run. Okay, so when price got to this point, price traded above this our point here, okay, our movement after the break of structure, and this gives us a change of character. So let's label it and let you see. Let's label it, sorry. Okay, let's go back. Let's label it again. Let's label here. Okay, let's hit label here, break of structure, to avoid having a mistake. This break of structure, let's have a break of structure. Okay, then let's have here our change of character. Okay, here change of character, okay, change of character. Then you see what price did. Once it got here, it changed character. And then remember, we said first step is to look for break of structure, second step is change of character, and then third step is to wait for price to retrace back into an order block or a fair value gap. And then right here we have our order block. Okay, right here we have our order block. Okay, so you see what price did here. Okay, bam, this is our order block. Third step, then once price retrace back, okay, you can decide if you don't want it to go too much, okay, long. Okay, at this point is where I enter my trade. And at this point below where price decided to respect the institutional reference points, where I place my stop loss. And usually my first take profit is around this axis where I have my change of character. Okay, and that alone gives me, okay, so if I take my first take profit here, my second take profit is usually at the axis where the 100% or 00% of the Fibonacci is, and then my third take profit is an open take profit. Okay, an open take profit. I can decide to take partials anywhere. Okay, you get, and so on. It just depends on where I feel like I want to take partials, and then I take partials. However, after my first take profit, my second and my third entry, I just put them to break even. So if the price goes in my favor, goes upward, I profit. If it doesn't go upward and it comes back, I do not lose. I only lose what I would have gained, but I do not lose even my equity at all. Okay, so this is how we do the trade. A 1:7, 1:8 risk to reward ratio. You see, if you watch closely, okay, watch closely. Let me zoom out again. Watch closely. Look at the order block. Look at the entry. Look at the risk reward ratio. Remember the steps. Once it trades into your POI, you look for break of structure. Once your break of structure is attained, look for change of character. Once your change of character is attained, look for an order block, a fair value gap, and then you manage your risk. Just imagine this kind of risk management, and then you're good to go. You do this always, and you will always be profitable. Until I meet you again, enjoy yourself and bye.